Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, in the last 24 hours, the Australian dollar has once again tried to restore its bullishness when the market takes the challenge to the upside after the Australian retail sales data came in slightly better and beating forecast by a rising 0.4% in May, while April was revised a tick higher also to 0.5%. The rally overnight posted a high of 74.23, but the market soon slipped very quickly and tumbled back beneath 74 cents and still indicates that towards the region of 74.60-65 is a sell zone. I would view any rises back towards that level an opportunity to shorten the market. And what I mean by short is sell into the rally, as I feel the market will turn around back towards the 73.45-55 support level, with the base holding still at 72.55.60. Reassess from there. The US dollar slightly quiet overnight, and the reason behind that was the fact that the market was celebrating Independence Day in the US. However, some ECB members made some comments overnight, seeing that the rate hike at the end of 2019 a little too late. It did give a little bit of a rattle to the euro, but not that much. The strategy at this point is still to sell rallies, and then towards 117.2030 is where I'm looking to shorten the market. I believe the market will turn around eventually and look back to the downside of 116.15 to 115.5, with the objective or the key level still seen at 114.85. A break beneath there would give further scope to 112.80. On the flip side, as the US dollar index comes in at 95.20, a break above there would also support a rally in the US of about 200 points, and therefore would see the euro tumble, as I've mentioned, towards this region of 112.80. But the level is still at 114.85. The weakness in dollar yen overnight fell towards the minor support at 110.25 and was respected after posting low of 27. It is viewed that further weakness may come into play, but towards the region of either 110.25 or towards 109.60-70 are classed as a buy opportunity. I feel that the market could still turn around and take out this level of 111.10 after recently rejected not only once but quite a few times back in May also. So let's see if the market does play to the dip side. Still, we got to come later today. We have the ADP private employment, initial jobless claims, ISM non-manufacturing index, and also the awaited FOMC minutes tonight. Then tomorrow we have the US non-farm payrolls data, and also the average hourly earnings, and also the unemployment rates. The pound is still trying to attempt to restore its bullishness since rebounding off 130.65. At present, I am bullish, and I am looking towards the region of 133 and see where the market takes from there. The immediate resistance is at 132.45.55, but I expect to see the rally towards 25 to 80 around 133, what I've highlighted it here. Dips still support from around 131.30 to 131.80. Well, the bullish outside range day got further confirmation overnight as the market rallied to a high of 61 before dropping back slightly. From a technical point, I still favour the move to the upside, and while these technicals are still firming up, could see a rise up towards the re-challenge of the highs, which resistance seen between 59 and 62, and could give scope up towards 67 to 69. Any dips on the day? I find support now at 50. Well, the long-legged doji in play still confirms that the oil outlook is still a little bit uncertain when it comes to the challenge of the top side around 74 to 76. What is interesting to note is that overnight, Donald Trump came out and tweeted and said OPEC reduce pricing now is what he said in one of his tweets. So see how the market turns out if we do get a bit more of a flow to the downside. My view is that we should get a fall, and that would bring a target towards the region of rather $69 to $70 a barrel, which I'm in favour of. So technicals are breaking down, could also give us an indication that we are seeing a fall soon. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day that's ahead.